The market is about to open on Wall Street as Ukraine and the invasion happening in Ukraine impacts stocks across the world. Here's a live look at the opening bell, the New York Stock Exchange there. All three major indexes closed up yesterday, and oil prices have dropped slightly, hovering back around $100 a barrel. Again, just awaiting that opening bell on Wall Street today. But let's bring in economic correspondent Deirdre Bolton for more on how this invasion is affecting the economy. Deirdre, it seems to be a little bit all over the place. So what do you think we can expect to see in the days ahead, both on Wall Street and in our everyday lives?
Diane, you said it's a little bit all over the place. That's the tone, definitely for stocks. If we talk about Wall Street, we could talk about Main Street in a minute. But as for stocks, people who participate in the markets just expect more volatility. This is the way that it's going to be. So you saw those incredibly wild swings yesterday. I mean, the S&P 500 was down at its lowest point around 2.5%. Finishing the day up by 1.5%. So it just shows you these swings. Very headline-driven news, of course, on everything that's going on in Ukraine. This morning, I want to highlight very, very early this morning, we actually had futures poised for a much lower open. There is a headline that came through Interfax about an hour ago saying that China has scheduled a call with Russia. And so that actually seemed to move the futures. And now, to your point with that opening bell, we do see markets moving higher. For Main Street, it's a lot more of a cautious outlook because Russia, as we know, is a large oil-producing nation. So any, let's say, taking out of supply, subtraction of supply is going to affect us all. So if you look at the national average price of gasoline, right now it's about $3.50 per gallon. It is likely we're going to hit that $4 per gallon mark pretty soon if oil prices stay as high as they are in the markets. And Diane, you know this affects everyday Americans almost more than anything else. And unfortunately, prices at the pump really affect the lowest earners in our country because they are the ones who are paying the highest percentage of what they have in their pocket to get where they need to go. And a lot of times that is work. Diane.
Now, we were already seeing historic inflation before this Russian invasion. So how do you think this attack could affect prices on things like groceries while people are already paying more for gas?
It's a great question. Unfortunately, I think the price of most things goes even higher. You said it, inflationary pressures. We are seeing inflation rise pre-Russian invasion to a 40-year high at the fastest pace in 40 years. Overall prices up 7.5%. But I go to the groceries, I see the prices that are there. Bacon is up 18%, peanut butter is up 15%. So there's a lot of items that a lot of Americans use or eat every day, or at least once a week, that are much more than 7.5% higher. But what happens with these higher fuel costs that we just talked about, whether it's gasoline in our cars or whether it's the diesel that food manufacturers use when they contract trucking companies to bring groceries to supermarkets, that's more expensive. We are the ones collectively who end up paying more for those higher energy prices. Also consider home heating bills, for example. Jet fuel prices, it is quite likely that airline travel gets more expensive if these airline companies pass along these higher costs of jet fuel, in the case of the airline companies, to us, again, the consumers who will be buying, in theory, airline tickets, Diane.
And Deirdre, we've already seen some sanctions on Russia. Those could continue to pile up. So what side effects could these new sanctions have?
Well, these new sanctions, of course, the hope is that it curbs Russia's thirst to keep going with this invasion, and it curbs its appetite to do more. There are a lot of people that I'm speaking with who somewhat cynically say that perhaps the sanctions that we have placed so far are not enough, meaning that gold has gone higher. Russia has a disproportionate holding of gold. Gold is up something like $200 to $250 an ounce. And also oil has spiked. We saw it close over, or rather touch, about $100 a barrel yesterday. That is another product that actually is helpful to the Russian economy. So in some ways, at least in the past 48 to 72 hours, at least two of the products that Russia has, as far as the markets go, Russia has actually benefited from it, Diane.
And so how is the administration planning to tackle the economic fallout overall?
Well, the Biden administration was already fighting a war against inflation, and we heard the president speak about that. I know you're paying more for prices at the pump. I know that everything is more expensive. He talked a lot, of course, about trying to reach everyday Americans. The next really pivotal moment is what the Fed does in mid-March. So the Fed was scheduled to raise interest rates. Why do we care about that? Because it makes all borrowing more expensive. If you have credit cards, your payments become more expensive. For someone who's trying to buy a house, that mortgage becomes more expensive. To get a car loan becomes more expensive. So that is the next turning point, at least for our economic story. What is the Fed going to do with this information, do with the fact that we are seeing inflation at a 40-year high, but we do have this huge X factor in the markets, which is this invasion by Russia into Ukraine. Diane.
All right, Deirdre Bolton, we appreciate it. Deirdre, thank you.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.